Hi everyone, welcome to today's session. I'm Georgie Price. I'm the Policy Officer at Social Enterprise Scotland. Lovely to have a mix of familiar and unfamiliar faces here today. I thought I'd just start with a bit of housekeeping before we get kind of going. So just a reminder that today's session is going to be recorded. So if you have any questions that you don't want to be part of the recording, then you can just write them in the chat or privately to me or the speakers. And if everyone can stay on mute unless you're speaking, that would be great. And if you want to add anything, just raise your hand, and that can be virtually or real. And yeah, just put anything in the chat if needed. Today's one of our finance focused webinars where we cover all aspects of finance to learn how to better drive money towards social impacts. And today's session, we're going to be joined by speakers from CAF Venturesome, who provide social enterprises and charities with the affordable, repayable finance they need to sustain and grow their social impact. So we're joined by Anne-Helene Sinha and Sara Felizardo from CAF, but I'll let them do the introductions. So I'm just going to pass over to our speakers for their presentation. Then at the end of that, we'll have time for questions and answers after. So if people want to put any questions in the chat as they're going, and then we'll answer them at the end. But yeah, over to you, Anne-Helene and Cara, and I'll bring the slides up now for you.
Brilliant. Thank you, Georgie, and lovely to meet you all. Delighted to be with you today. So I'm Anne-Helene and my colleague Sara. We're both part of the social investment team at CAF Venturesome. So the aim of today is very much to give you a bit of an introduction around social investment and to help you and then to help you effectively understand the social investment, both what it is all about and what you need to be aware of, but also the wider effectively social investments landscape. So hopefully we'll give you some tips and food for thought. The idea is very much we give a presentation about 20 minutes, but then leave plenty of time for question at the end to address any potential question you may have. So can we go on the first slide, please, Georgie? So what is social investments? So effectively, for those of you who may not be aware of it, but effectively it's investment which is looking to achieve both a social and financial return. And if you've all heard about impact investing, we're very much on the kind of social side of things. So the social return is absolutely central to what we do. And I would say more important even than the financial return. It is, however, obviously repayable finance. It's not a grant. You will have to repay it in due time. And in most cases, you will also have to pay it back with interest. At present, due to effectively the pandemic, etc., there's been a lot of blended finance offer which is available, which is exciting, which is effectively grants being offered alongside loans. So depending actually on the level of grant, you can get in that blend, and the interest, it might mean that actually the overall package effectively become a bit of a repayable grant because the cost of the loan can be covered by some of the grants you access. So it's worth doing the math on that. But in terms of CAF, especially for us, social investment, because we're backed by philanthropic capital, which is quite unique, at least in the UK, we are able to effectively offer affordable and flexible finance, but we still have to return the capital to our funders at the end of the agreed period. That's why we can't do standalone grant effectively. Next slide, please, Georgie. So why should you consider accessing social investment? Well, there are many benefits for doing that. One of the main reasons is effectively that it's usually, it is unrestricted effectively. So especially for those of you who might be currently relying exclusively on grant, effectively it allows you to kind of invest on areas which are usually not covered by grants and make investment in your organization. So it allows you to obviously help you grow as an organization, so invest potentially in increasing your staff or in investment in technology, etc., which will later down the line help you generate income. It can help you meet some cash flow gap as well. So for instance, you have a contract, or you have a grant which will gonna come, but these are going to be paid in arrears or once you've achieved effectively certain milestones. So what we can do is provide that upfront capital at the beginning to allow you to kind of get started with your project, and then effectively when you get funding either from the grant, from a contract, or by generating income from service users, then that's when you can repay us effectively. And then it might help you as well to leverage additional funding. It's not unusual that when you want to access, for instance, grant funding, that you're being asked to match funding investment elsewhere. So that's a helpful exercise. And obviously, if you access social investment, and sometimes we have clients who looked at quite sizable amount, and we can also introduce you and co-invest with other social investors. So it's a very collaborative sector in that way. Next slide, please. So what is social investment compared to bank lending? So effectively, social investment and bank, they're not here to replace one another effectively. Social investment is very much here to kind of fill the gap that what the bank can't do effectively. I've had, when I started working in the sector, I remember being described as the kind of jam in the sandwich. So effectively you have, maybe bank lending and maybe you have grant funding, but you're still missing that gap. And that's where we can come in effectively. We're able to take more risk than the bank can do. Most of our loans are unsecured loans, so you don't need to have an asset. There is no, security being taken, or we don't ask for, directors guarantee, etc. So it's primarily unsecured. The interest is likely to be higher. However, at the moment, it's kind of becoming more and more on par, but we are fixed interest. So again, gives you, I guess, some reassurance in this volatile environment around the interest rate, that you know exactly how much you will have to pay over the next 5-6 years or up to 10 years, depending on the length of the loan you're looking to get. At the moment, we're able to provide a grant layer as well, obviously on certain conditions, but very much depending on obviously the level of social impact you're looking to achieve, as well as obviously whether you are in need of that grant funding, and whether you're able to kind of that grant will allow you to effectively improve the long-term resilience of your business. The other difference compared to bank lending is, we focus very much on the social impact, and we will do a deep dive in the business model of your organization. So because obviously we can't rely on an asset, should you not be able to repay the loan, we really need to be comfortable with the business model, the strategy you're planning to take, and whether we effectively believe that you can deliver on that aspiration. You would also access social investment usually for potentially smaller loans effectively. Bank lending usually starts, at least on the social banks that we see around us, from 150K, some of them from 250K onwards. At our end, we can do loans from 25K and even less for early stage enterprises. So we tend to do smaller size loan as well. But effectively, if you're unsure whether you fit more in terms of the kind of social investment space, or whether you're more into the bank space, I would say speak to us, because at CAF, we have the unique chance of having a bank, which is CAF Bank, which is part of the CAF group, but who is also with a regulated bank, so they are independent from us. And effectively, and we have obviously the social investment arm with Venturesome. So effectively, we can look at your project and look at where best you fit effectively. Is it more appropriate for bank lending, or is it more appropriate for social investment? Next slide, please. And I think I'm handing over to Sara now.
Yeah, so I guess just to cover a bit some of the things that you need to think about, I guess, before approaching a social investor. I think the first thing is really what's your social impact, or what social impact will you have in a newly formed organization. The most important thing for us, for social investors, is really your social impact. And so you'll need to exemplify and demonstrate what's the social impact that you're having through your products and services. The second thing is, how much do you need? This will, of course, determine the type of social investment you can take on, and the type of investor that you should contact. As Anne-Helene has mentioned, we can do co-investments, and we would very much be able to refer you and help find you co-investors, but it's still good to have that initial rough estimate to determine who you should contact in the first place. Then, of course, how you'll generate the money to repay the social investments. As mentioned, this is about repayable finance, so it's important for us to also understand what type of activities will then allow you to repay the loan over the term, and having a clear plan about it. Of course, as Anne-Helene also mentioned, having a clear plan or business model. This doesn't mean that we need a written business plan as a starting point, but essentially being able to talk to you and really understand what your business is about, and trying to understand do you have a clear vision about your strategic direction over the course of the loan. And finally, what type of legal structure do you have or will you have in the future? It's very important because legal structures have a direct impact on the type of capital that you can access, and also the type of investors that will be able to support you or not. So it's really important to do that research in the first instances. Next slide, please. So sort of related to that, we'll next slide, please. We'll talk a bit about, I guess, how would you choose a social investor? How do you know who's the best fit? I think the most important is really to understand that a social investor, and choosing one, it's really about the partnership, the long-term plan, making sure that a social investor is really aligned with your organization and is also sort of a critical friend that will able to questioning on some decisions, but at the same time being able to signpost when needed, or providing the flexibility when things don't go according to plan. So you'll see that some investors might be UK-wide and others might be regional. So of course that will, in the first instance, might determine what type of social investors you can reach. Some will be able to offer larger loans, others less. As we mentioned, for instance, we start at 25K. Interest rates will also be different across the social investment sector. So it's really important that not only you understand what the interest rates are, but also the type of all associated costs with a loan or a blended finance package. Do you understand the fees, etc. And finally, of course, there will be some investors that can offer a grant alongside a loan. These will probably be different conditions across social investors. So also good to do that research in the first instance. One thing that we should say, the best place to start, we think, is the Good Finance Directory. You have there essentially a description of all social investors. I think you can also have like a sort of a quiz in their website to see who are the best ones for you. So, and I guess just to finalize, in doubt, please do contact them. I think everyone across the sector is very, very happy to make sure that you're an eligible organization and direct you to others if not. Next slide.
Great. So I think it's back to me on this one. So a little bit about Venturesome then. So we are part of CAF. CAF is one of the biggest charity in the UK. So we are very much a charity effectively. So we are value aligned to your organization, which I think is quite important. So we want effectively you to you to succeed. And we are also, because we're backed by philanthropic capital, we have the opportunity to both be relatively affordable, but also we can be flexible in the terms of our loan if, as and when required effectively. So we were set up 20 years ago. Actually, we celebrated 20 years last year, and we've published our 20 years of impact report. So feel free to have a look after the webinar. But effectively, we are one of the most active social investors still in the UK. As you can see, we've offered a lot of loan since 2002, so over 705 loans, totaling 62 million in a range of investment effectively. Mostly were unsecured loan, but we've also offered, standby facilities, which is kind of money you access as and when needed. Quasi-equity for early stage organization who are yet to be profitable, as well as social impact bonds, now social outcome contracts. Since 2020, we've started offering blended finance as well. So part loan, part grants, which has been obviously very popular. And we've supported over 500 charities so far. We are completely sector agnostic, so we're very much here to, we see very much ourselves as filling the gap of which cannot be met effectively elsewhere, either via bank, via grant funding, or maybe other funds who might be more specific in terms of what they're looking after. Next slide, please. So this is an overview of our fund. Our main fund is the fund which is in orange, probably the most of most interest to you, which is our development fund, which Sara leads on within Venturesome. So effectively, it's a fund that provide from 25k to 400k loan. We have fixed interest of 6.5%. For unsecured loan, it's usually about 5-year term, but we can do up to 10 years. And if we take on security, we may be able to reduce that interest effectively. We offer still part loan, part grant. We still have a small pot, so we're able to do that as and when required. And we've done as well in the past kind of social impact bond, quasi-equity, charity bond. But what's important to remember is we have quite effectively flexible term, and we don't have hidden cost, etc. So we really try to be very transparent in terms of our pricing strategy. We also have some more specialist fund. So on the left side, you have our early stage fund, which are where we would offer interest-free loan in particular, alongside potential grants. We have the SC Assist, but that's very much Wales-based at the moment. If there is a need in Scotland, it'll be good to know. And then we have also just launched a new pilot called the Social Business Impact Program, which we're really excited about, which is a program that offers incubation accelerator support with a partner, so business support to a cohort of 10 women from diverse background. And then at the end of that, hopefully all will be receiving a blended finance package, so part grants, part interest-free loan. As well as some mentorship from our funder, JP Morgan. And then we have also our community-led housing fund, again, quite specific, but we do have some investment in Scotland in that fund, which is to support the construction of affordable home by community-led organization, often in the form of CLTs, but sometimes more broadly community-led housing, whether it's housing co-op, co-housing schemes, etc. Next slide, please. Yeah, I think it's back to Sara. Yeah.
I think Anne-Helene covered mostly, but essentially, I think that the reasons why talking to us might be right for you is really the fact that we are a charity. We are able to have a high risk tolerance due to the nature of our capital. As mentioned, we have one of the lowest fixed interest rates in the market at 6.5% in the main development funds that Anne-Helene just mentioned. And we are able also to provide that flexibility. So we understand that things may change over the course of the loan. There might be projects that don't go exactly to plan or during the timescale that you were thinking. So we might be able to vary the repayment schedule. And at the same time, if you have too much cash in the bank, things have been going much better than expected. We also don't charge early repayment fees. And finally, we are able to offer those blended finance packages, standby facilities if you think you have grant funding, which is sort of maybe comes in quarterly, and you know it comes, but it provides you with a bit of a cash flow blips around the way, and maybe you think a standby facility, having that facility in place for you to be able to access when that happens would be helpful. We can also offer that. And finally, our team is always happy to help. We of course value communication quite a lot, so it's a good, hopefully a good experience for the investee as well. Next slide. So talking a bit more, I guess, about the process. How would you apply to a loan for a loan with us? So essentially, it usually starts with an initial conversation. Either you get in touch via our website or email or phone, and we do a simple eligibility check to see if we think you'd be eligible for either of our funds. Then you talk directly with a member of our team, which would understand a bit more about your business model, understand a bit more about your need for finance, and essentially ask for a few more questions on the financial parts, financials, and governance. So we carry due diligence, and I guess one thing to mention is due diligence is not fun, but it's, I think, the feedback that we have from our investees is that it's a very helpful process for them as well, to actually have someone querying about things and making them think why some decisions were made. And so once the due diligence is finalized and we're happy with it, we then write the application paper to take to the investment committee. So this process can be very quick or can take up to circa 3 months. Of course, it also depends on the urgency of your request, how quickly can you provide the documents that we need, and have those conversations. Then in terms of approval, so once we're happy with the application, we submit the investment application to the committee. Assuming it's approved, we would then do the boring bit, which is drawing up the legals, sending you the offer letter that again explicitly states all the terms of the loans, having internal KYC checks, and of course sending, once the funds are drawn, which may be attached to some conditions that were clearly discussed with you during the due diligence stage, we then send you the final repayment schedule. And this takes about 6 weeks from the approval to the drawdown period. So if it's a very urgent request, it might be that the turnaround period is not sufficient. So it's good to have that thought ahead. I guess I want to initiate this project in March, so I will start to plan ahead and go to an investment committee in December, something like that. After the loan is approved and dispersed, we then tend to check with you every 3 months. This might be either a quarterly call or just an email, just to understand how things are going. We ask a few more questions, track a bit of progress, both in terms of financials and social impact. And as mentioned, if there's anything that is not going according to plan, I think for us, honesty is really always the best policy. So if you are concerned that maybe you won't be able to repay your loan, or you essentially, if you have concerns about the future now, of course, with the cost of living crisis, it's always good to talk to us about it and see how we can help, or how we can signpost also to other organizations. Some organizations also want that bit of advice, I guess, over the course of the loan. I'm thinking about doing this in terms of strategic advice, and this is also something that we try assist in any way. And of course, we also tend to champion your social impact. We write case studies and share your stories, which might also be very helpful for you. So overall, I guess the process probably takes longer than what you think, but it can also be quite quickly dependent on the needs. Next slide. So I guess just to get you, to give you some tips to help you, I guess, what do we look for when looking into an investment application? I think the first thing is really social impact. This is absolutely central. We need to understand how do you deliver it through your product and services. Secondly, why do you need a loan? Does the rationale make sense? Why that amount? And how will you repay it? So essentially understanding that if you have a project, sort of a budget should be defined already for us to be able to really consider the application. Of course, in terms of the initial conversation that we have, we can always redefine the amounts. And of course, it will also be determined by the affordability. When we look into the financials, can you really afford that amount? But it's good to at that initial conversation have sort of an idea what are you looking for. Then of course, financials, we need to have, we need to be able to see your signed accounts and management accounts. So we need to understand how things have been going, not only in the past, but how are things going in versus in this fiscal year, are things going according to plan? Legal structure, as mentioned, this really determines how, if we can invest in the first instance and what type of investment you can access. So also really important to have that clear. And then what we also look into very much is governance. So making sure we need to trust both the management and the board. It of course has to do with that strategic vision. So essentially, this is one area that we cover in the due diligence. So it's also very important for you to think, is this strong enough to allow us to make the right decisions? And then of course, if you feel like maybe we don't have the internal capability, maybe to do a full governance review or do the cash flow modeling that my social investor is asking, we can always introduce you to the REACH fund. So this is a fund where you can essentially get a grant for up to 10, 15K for consultancy advice.
Sarah, sorry,
yeah.
just on this, REACH fund is England only.
Yeah, I was thinking about it.
Yeah.
So, yeah.
Apologies, we should have removed that. I
was thinking about it. Yeah. So essentially, for organizations based in England, there's some sort of pre-investment support that you can access. Again, I guess not sure if that exists in Scotland, but of course, if there's something that you can say, I don't have this ability to do, we can always try to assist you if it's really. I guess we can always try to advise you in that sense before, without rejecting you. I guess there's always a scope for you to come back after a few months and we telling you exactly what we need. So there's a bit of back and forth conversation at the initial stage that can be helpful for you. Next slide. And I guess just to finalize, for you to see, I guess, how we've helped other organizations, a couple of case studies. So the first one is Support When It Matters. This is a community interest company based in London that essentially serves two groups. One is to support older Black men leaving the justice system and with experience of substance abuse, and the wider African, Caribbean, and dual heritage community. So what we've done last year was provide a 110K blended finance package. This and alongside that, I guess, before getting to that investment package, we did refer them to the REACH funds, and they were able to work with a consultant to get governance review, to do the cash flow modeling bit for them to assist them in that way. So the social investment was made to really allow Swim to recruit a new business development manager and executive assistant and frontline staff, essentially to support the CEO. This was a still early stage organization, to assist with the CEO to give them more capacity and the ability to grow. So after our investment, they were able to indeed to recruit the business development manager, they recruited the virtual assistant, and they're also recruiting a new board director. So you'll see a quote there from the chief executive saying that, of course, working with us was allow them as well to have that sense of why governance and financials transparency is important, and they think will allow them also to be better prepared to help attract new contracts and grant funding. I think this is also something that we've heard from previous investees before. That scrutiny is quite helpful. And over to you, Anne-Helene.
Yeah, thank you, Sara. And then, yeah, the next slide is another case study, just to show a bit of the breadth of what we're doing, but close to my heart. So this is a charity in Derby, very local charity, looking after supporting adults with profound learning disabilities. So they had a charity shop, and they decided they wanted to buy a building in that same street and to act as a training center to kind of support adults with learning disabilities to be more independent, so live by themselves. To have a kind of cooking workshops, but also have like sorting out as well some of the items they were doing and selling them on eBay during the pandemic rather than through the charity shop, which was closed at the time. Anyway, so they needed 100K, and we give them 75K loan, which was unsecured, even though it was to buy a building. Due to the small amount, we kept it simple and offer an unsecured loan as well as a 25K grant. And that has allowed them to obviously welcome more people. I believe they're fully at full capacity. Effectively, they have more demand for their services, and they're able to support their local community, both via the charity shop with their beneficiaries as well, being volunteers and being the ones selling articles in the charity shop, as well as supporting them next door with the training center. So I'm going to stop there to kind of allow for some question, but hopefully that gives you a good sense of what social investment is about. If you didn't know, give you a better sense about what we can offer and how we can help. But hopefully, if there's one thing you remember, is effectively this is a conversation effectively. So don't hesitate to effectively get in touch, call, ask question if you're unsure. I've seen many coming to us and say, well, actually, no, we can't because of this, and then coming 3 months, 6 months, 1 year later and being, okay, now I think we're ready. And yeah, being quite impressed that they've completely taken on board what we said, and then we were able to make investment in them. So it is a conversation. If we say no the first time, doesn't mean that we're going to say no the second time. Effectively, it is an iterative process. And we're here to start the conversation with you.
Great, thanks so much. That was really informative, really useful to hear. So I guess just opening up now, if anyone has any questions, for the speakers, then now's your chance. Kat, if you want to come in, you might need to unmute first.
Thanks. That was really interesting, really good summary of everything. Just a couple of questions. What are the key criteria for the growth fund? And then secondly, who are some of the co-investment partners that you work with?
Yes, of course. So development fund, the key criteria is they're quite broad actually. So you need to have been trading for at least 1 year. You need to have last year to be above 60K of income. And then you need to have charitable aims as part of your structure. So we can invest in a broad range of organization, whether it's charity, a CLG, a CIC. I can see you're a CIC. So we just need to confirm them. But as a CIC, usually you would this would be confirmed, but we'll double check them. And then second part of the question, who do we co-invest with? different people effectively over the years. We've co-invested with Nesta, Joseph Franfi Foundation, Esme Fairbairn, Big Issue Invest, Bridges, I'm sure I'm forgetting London City Trust.
I think
also
Social Investment Scotland as well.
we have, okay, great.
Or at least there were definitely conversations about potentially co-investing. So yeah.
That's brilliant. Thank you. Cheers.
I don't know if anyone else has anything else to ask. Justin?
Yeah, thanks. Thank you so much for all of that information and presentations. Really appreciate that. Just a quick question really about if you're effectively pre any really significant turnover. We've been mostly operating in a way as a social enterprise for years, in that we've done so much for free. So that's not been our strength, a sort of a background of you know, income and accounts and so forth. It's mostly been personally invested, you know, the sale of a home and things like that from quite a long time ago. So just wondering if that's going to be the biggest sort of obstacle in terms of not, in a way, having that sort of long term, you know, 1 year of trading 60,000, etc., as an example.
Yeah, so I think we obviously assess organization on a case-by-case basis. So it's never a kind of tick box exercise. We've had sometimes conversation where they had a business under a separate structure, a different legal structure, and then they shut down, and then we opened a new legal structure, and effectively that organization was just starting to trade. But we looked at, well, okay, we understand you did that slightly differently, but there, and so we took that into account, for instance. Or we had organization, I mean, I remember like, I think Swim, no, I think they were meeting the criteria, but some organization who might be just there or might be 50K, but they have this huge contract coming up. Or so if we have effects, so we look both at actually what have you achieved in the past, maybe not exactly in that format, but also what do you have potentially coming up. And if, you know, your income last year was 30K, but actually you have a big contract coming up, which you've already signed for 150K, then obviously we will consider you effectively. But you have to remember that, you know, if your income is 60K and you're looking for a 500K loan, you know, we're gonna be nervous effectively. So it's just to give an indication of proportion effectively. I hope that helps.
Yeah, great. Thank you.
Great, thank you. Anyone else for any questions? Brian?
Oh, there you go. Good morning or good afternoon. I'm Brian Weaver from Impact Hub in Inverness, and we deliver the Just Enterprise programme for the Highlands and Islands. And Just Enterprise is a Scottish government funded a contract that enables everybody who's running a social enterprise to get free business advice. So if Justin is looking for somebody to talk to about a suitable legal structure, if he's looking to do some cash flow planning for the next 3 years or anything else, then Just Enterprise should really be his first port of call. Won't cost anything. You'll get somebody who's local, who understands all there is to know about social investment and so on. So that's all I was going to say. Nice to see you all. Thanks.
Thanks, Brian. Right then, I think if anyone's got any, no last minute questions, then I think we'll wrap that up there. But just like to say a huge thank you to our speakers. That was really useful to hear. I'll be sharing the slides around to everyone that's come. So you can see those later. And if anyone has any questions after the session, then just drop us an email and we can respond to that. But thank you everyone. I hope everyone has a lovely day, and thanks to our speakers.
Thank you for having us. Have a lovely day. Bye everyone.
Bye.